Hello, this is Fred from Mountaintop Loan Services. Just wanted to go over some information with you about investment property loans and how you can use them to maximize the ability to buy the properties and the ability to make money off of them. Now, probably by now you've heard about the meltdown in subprime market has been all over the news. Foreclosures are on the rise and home prices have dropped in many areas across the country. And the number of real estate investors in the market have fallen off considerably as many of them have lost their shirts trying to buy homes at the top of the market, hoping that the prices would keep going up. Now there is a new sheriff in town, so to speak, and all the novices are gone, leaving room for seasoned investors to play the market again. And being a bit of a contrarian nature, I see lots of buying opportunities out there if you know what you're doing. Many markets are seeing increased rents as would-be buyers are putting off their home purchase as, again, home prices are not too certain right now. And those who have lost their homes due to foreclosure are obviously turning to renting as well. So it's putting some upward pressure on rents in many markets. And that presents a pretty good buy and hold opportunity for good properties. And of course, part of determining the right property for buying and holding is the type of financing that you have in place. And despite that, most of the mortgage companies out there have been tightening up the credit policy. There's still a lot of financing options for would-be investors, new and veteran alike. Now, some of those options include 95 to 100% financing. Now, those have become much more rare as of late because, again, the mortgage companies have been tightening up their policies. But those are still options that are out there, and we have access to a few of those here at Mountaintop Loan Services. But the biggest thing that you want to be concerned with is that you have equity built into the property when you buy it. You want to have at least 10 to 15%, preferably 15 to 20%, so that if you're facing still a decreasing marketplace, that you have some cushion there. If you need to dump the property pretty quickly, you have enough equity to play around with so that you can come out at least breaking even. Another one of the options that are still pretty popular, but again has become very rare, is the option using pay option arms. Now those are great when you have 20% to put into a property, whether if it's your own cash, a 1031 exchange, or if you have a property that has at least 20% equity into it that you've owned for about a year, you can refinance the existing mortgage using a pay option arm. But again, the biggest thing here is the 20% equity position. Now, with these loan programs, to get the good ones, you do need to have pretty good credit. If you don't have good credit, there are other creative options available that is beyond the scope of this video here. But just know that it is not the end of the world, and that's something that we'll touch on at a future date. Again, this is not by any means a complete list, but just wanted to touch on a few options that were popular that are still available in very limited situations now. So you can get an idea of what you can do in the current marketplace that we're going on right now with prices falling and foreclosures on the rise and rents going up. So I think it presents a pretty good buy and hold opportunity, and if you got the right financing in place, you can definitely maximize your cash flow on these properties now. So that's pretty much it for now. If you're listening to this on podcast, you can definitely go over to YouTube and do a search for investment property loans. Will probably come up there in the video. But that is all for now. Hope this sparked a little bit of what you can get accomplished out there. And stay tuned for the next video.